Burckart. I'm the Managing Director of Impact Economy North America, which is a global impact investment and strategy firm. We have units in Europe, in Latin America, and in North America. It's interesting. The question is great, both from what have I seen and what haven't I seen. I think in terms of what I've seen is that there is a more acceptance of the concept. It's not as much of a challenge anymore to really educate people on it, to get them excited about it. I think that impact investing, more than anything, has really achieved this idea of being a concept that folks are excited about and want to engage in. I think what I haven't yet quite seen is that there are still these real interesting market gaps that still need to be filled, whether in terms of knowledge, in terms of products, in terms of activity, and I think that what you are now seeing is a whole new class of investors, of talent that is moving into the space to really help address those market gaps. So I think it's, as much as I've seen some of the issues grow in intensity, I have also seen the needed infrastructure and talent to help to solve a lot of the problems. We did a big body of work for the G8 Social Impact Investment Forum that was recently held as part of the UK's presidency of the G8. This was last summer in June of 2013. And part of what we really zeroed in on in terms of these remaining blockers or challenges that the field needs to address include the issue of transparency. So if we can't demonstrate in a very meaningful way the impact of these investments, then the whole point of impact investing becomes moot. But then also looking at that deal side, and this gets to the products. And in that particular area, it's the challenge of getting folks to understand the complexity of these transactions, and that there's a lot of ways that there's a lot of effort that needs to go into creating investable opportunities, whether it's from structuring to looking at government incentives to looking at kind of what is the market, how would the market respond to a product like this, to the business opportunity. I mean, first do no harm. We want to scale really promising investments, but we also don't want to potentially, actually harm certain industries or certain themes in terms of making social progress. So it's a very, I think particularly around transparency, particularly around investable opportunities, there's still a lot of work to be done. So I think we can point to, what we know is that we can point to the community finance space. And so we can look at what happened with the Community Reinvestment Act, which has motivated big financial institutions to invest a portion of their assets and their lending into the communities within they operate. We can look at the ecosystem of community development financial institutions that emerged as a result to help serve as intermediaries to mobilize this capital and deploy it in these communities. And so I think you can see the role that government has played effectively in a subsector of impact investing. If we think of community finance as a subsector, I think it's also played an interesting role with foundations. You look at the program-related investment requirement, or the regulations around program-related investments that have allowed foundations to deploy a percentage of their programmatic assets towards making investments as opposed to grants. And while it has never gained quite the traction that I think everybody has hoped for, increasingly you see examples, FB Heron Foundation, you see the Gates Foundation experimenting, you see KL Felicitas Foundation in California. You see enough examples of promising ways to harness foundation endowments and programmatic resources, and a lot of that stems from all the way back in 1968 when the Rockefeller Foundation made the first program-related investment, and then the regulation that followed a year later. So I think you see really interesting opportunities for government and for policy in general to help incentivize this market. And I think in terms of the US market and impact investment, as we are now defining it, you see opportunities with a new national task force that is looking to help kind of look at what has been done in the UK, which has been at the forefront of this? What has been done in other parts of the world to really start incentivizing this activity here in the US? So I think we're kind of still at the beginning stages of this, but I think there's promising signs that the market will start, the regulatory market will start to catch up. Well, it's interesting. It's actually a question that we've been thinking quite long and hard about recently. I think there's really two scenarios. One is that we are unable to adequately address a lot of these limitations that are currently still, limiting the potential of the field. And in that case, it could be anything from us having to essentially rebrand this approach to mobilizing resources, where we end up having something new that we're all excited about. That's the equivalent of impact investing, but we call it something else, and we repeat the cycle 10 years from now. I think I'm more optimistic because I'm seeing from whether it's major investors that are increasingly looking at the full spectrum of the different windows that they deploy capital, looking for ways to harness impact investing within what they do to meet philanthropic mandates, but also to match financial motivations to essentially meet the growing client demand that is out there. I think you see corporations that are increasingly seeing the power of sustainability, and so they are looking at the future growth of their business, at future competitiveness, and how it's going to be tied to sustainability, to products and services that speak to the core feature of what these companies do, but that also address these environmental and social objectives. An Accenture study that came out in 2012 signaled that a majority of executives of these major companies have seen sustainability as the key to their competitiveness, particularly in breaking into the BOP and other high growth areas. But then in 2013, they did a follow-up where they said, well, these CEOs have expressed that they've hit walls, that they are struggling on their ascent to sustainability, to really implementing it fully. And so I think as long as we can start unpacking what those barriers are and really begin to address them with things like corporate impact venturing, which is really harnessing venture capital in the context of impact investing, I think you see these interesting innovations. You see in the community finance space these new models like the American Dream Fund that are bringing a kind of wholesale approach to addressing the costs and some of the other barriers that are preventing investors from mobilizing capital. So I think the more that we start seeing folks pivot from identifying the problem to actually providing solutions, I think in 10 years we have a more robust market. Will it ever meet the forecasts that everybody likes to throw around of 1 trillion or whatnot? That's an open question. But I do think that as long as we really start focusing on solutions, we can make impact investable. I mean, bottom line.